Good afternoon, all, and welcome to our panel discussion this afternoon. The topic today is building a fintech ecosystem, specifically looking at the foundational digital infrastructure necessary to ensure an effective system. The last speaker, Subnendu, has set the scene very well for us on the key pillars of foundational digital infrastructure. I am Gerald Kasimu, as introduced, and I am very pleased this afternoon to be joined by an esteemed panel who I'd like to ask to introduce themselves very quickly, and then we'll go straight into the discussion as we unpack some of the insights and issues raised in the last keynote speech. Jason?
Yes, thank you, Gerald. My absolute pleasure to be here today, and thank you very much for inviting me to be part of your panel. Jason Bowers, I am the Emerging Markets Director for Oracle, based out of Kenya. And the nice thing is that from here, I'm able to cover 49 countries, which is my responsibility, across Central, Western, Eastern Africa, some of our South African colleagues as well, and also some countries in the Europe and Central Eastern market. Thank you.
Very well. Thank you very much, Jason. Leslie?
Well, thank you so much for the opportunity to be here. I am the Senior Technology Advisor at the World Bank Group, advising government, policymakers, central banks on the regulatory impact of the emerging technologies such as artificial intelligence, blockchain, Internet of Things, 5G, cloud, and edge computing. I was the Chief Technology Officer of the World Bank Group, and prior to that, I was in the private sector for quite a while, and focus on the technology intersection with policy, especially in emerging market, raising the discourse on data governance and social contract for the digital economy as we unlock the value of data, especially for cross-border, and shifting the power to the people and the communities. So I'm looking forward to the discussion today. What a great topic. And I was in Kenya last year a couple of times, really appreciate the warm hospitality. Looking forward to the future opportunity to be back there. Thank you so much.
Very well, Leslie. And last but not least, Nandini.
Hi, my name is Nandini Harihareswara, or Nandini. I'm the Senior Advisor to the Inclusive Digital Economies Division of the UN Capital Development Fund. I'm also our lead gender focal point. So my focus is advancing inclusive digital economies in least developed countries, which we'll talk about in a few minutes. I'm very happy to be here. Last year, I was fortunate enough to be invited to be a judge for the Afro-Asia Fintech Festival, where I originally met Gerald and had the pleasure of meeting many of the fintechs competing to be on the stage for last year's Singapore Fintech Festival. And I'm pleased to be here with my esteemed colleagues to talk about a very important subject.
Thank you very much. And I think with that introduction, I would like to go straight into the conversation. Obviously, digital infrastructure is central and foundational to our digital future, and is emerging as a critical determinant to services and socioeconomic progress in many economies, especially our emerging economies. Many stakeholders play a very important role in enhancing the digital infrastructure, whether it's policymakers, industry participants, and other stakeholders who need to work collectively to do three things, which I like to highlight. One is committing to actions that promote the long-term growth of the digital economy, and more specifically, our fintech ecosystem, which essentially is the topic of this discussion. Secondly, removing any impediments to the expansion of digital infrastructure and the related ecosystem. And then lastly, modernizing policies to encourage investment and innovation throughout the internet ecosystem, with fintech ecosystem in particular. And I think to open the conversation, I would like to go straight to Nandini. Nandini, I'd like you to perhaps just share some insights about what does it take to grow an inclusive digital economy, and why is it important?
Thank you for the question, Gerald. I think this is something that Leslie is very passionate about. I think Jason is too. And I think, when we've been having our discussions prior to this, it's a theme that was sort of running, that was one of the undercurrents of all the work that we're doing. So it's nice to start with that conversation. Building inclusive digital economies is critical. What we're seeing even before COVID was every economy, regardless of how small or big it is, and the UN Capital Development Fund actually focuses on least developed countries, but every economy is becoming a digital economy, right? What we hope is many economies will become the next digital economy success story beyond just Kenya and others that we know well. But as a economy becomes more and more a digital economy, that chance for the digital revolution to actually help people leapfrog development, to help people access the critical services they need, for an economy to be inclusive, actually could go both ways, right? The digital revolution, as we all know from so many reports, including the task force for the digital financing of SDGs, could actually exacerbate the digital divide. And it could become a more divided economy or economies that we all work in, or it could actually really advance an inclusive approach and really bring to the people that need it the most the critical services and access to services such as financial services, transport, education, health, agriculture, all of the things that make living life a better life for all of us better. So what we do as the UN Capital Development Fund, and as many of our colleagues in the panel today do, is work on building inclusive digital economies. And what that means is actually taking an ecosystem approach. So what we know after years and years and years of doing work in lots of different kinds of markets is when you want to get something done, when you want to make a change, you need a market facilitator. That market facilitator works with the government, works with private sector, works with civil society, and understands everyone's incentives and helps move them in a direction that still helps them accomplish their objectives, but actually build something more, that actually builds an inclusive digital economy. That's some of the work that I've done in Zambia and Malawi prior to shifting roles. And that's some of the work that my colleagues in the 28 countries that we work in do. And so that's one of the reasons that we think it's so important to be part of these discussions as well with our esteemed colleagues, because we have so much to learn from each other in order to accomplish this very audacious ambition to be growing an economy in a direction that is not just growth generally for the economy, but actually inclusive for all.
Very well, Nandini, thank you very much for those opening remarks. And we will come back to this topic and continue on inclusivity. And I want to turn my questions now to Jason to build further on the points that Nandini has made. Obviously, in building an inclusive digital economy, what we see from a digital infrastructure standpoint is the role of APIs and a strong API ecosystem, which is crucial to building a strong fintech ecosystem. How do you view the role of APIs in ensuring inclusivity and reaching out to those who were previously not included in the traditional core financial system?
Yeah, thank you, Gerald. Nandini made some very key points there, and that is around sort of having that inclusivity of people who have not necessarily had access to traditional banking in the past. A simple way of looking at it is that during this upheaval of the pandemic of the COVID-19 at the moment, the customers' needs are changing. The way that they want to interact with suppliers, whether that supplier is a bank or whether that supplier is an educational institution. The demands of what is expected of them has changed dramatically. And an effect that has had is that, in particular with fintechs, the way that they have to look at how they provide, they come across with a customer-centric approach and not product-oriented. So traditionally in the banking industry, when I was growing up, I remember opening my first bank account and visiting the local branch. in the United Kingdom as a young student, and filled with fear of going in and having to fill in a bunch of forms. You know, that whole filling in of forms, etc., has moved on. We are very, very fortunate that with the advent of technology, that the way that banking is done, we use mobile platforms, we're able to look at Forex rates on the fly, etc. So the fintechs are creating, you could say, a little bit of competition for the traditional banking industry. That comes from peer-to-peer lending, that comes from crowdfunding and various other parts. So for emerging markets and for the areas where Oracle will focus, it's how do we help the banking institutions partner with the fintech organizations, because if they don't do that, the likelihood is that they're going to miss out on where the banking future holds. Now, I've done a couple of talks recently around the future of banking, and something that I think it came as a surprise to me when I was doing some research, but also I think it came as a surprise to the audience, was when I mentioned that if you look at if you take Kenya as an example, and you take the population size of Kenya, and you look at the birth rate that we have in Kenya, and then you subtract the death rate from the birth rate, we are adding approximately 2 new Kenyans every minute. Now, you know, what does that mean? Well, those are your customers of the future. And my children today have no concept of visiting a branch. They have no concept of, you know, what is a mortgage. So the whole terminology of what happens has to change. Fintech play a very, very important part and a very important role in that. The API part is, if I give you an example of having open APIs and how that is beneficial to the financial industries as well. If you take a company like Uber, we all know Uber, we've all used Uber, and there are various varieties and flavors of Ubers around the world. Uber now has a market capital that is larger than BMW, the car manufacturer. But the way that they have been successful is that they've combined multiple API services that are offered by others. So they haven't tried to invent it by themselves. They use APIs that are offered by others. And let me give you the example. So the positioning of where you are so that the Uber can come to you, that is run across your iOS on Apple devices or on the Android operating system. That's separate. The route calculation and the maps, that is provided largely by Google Maps, so another provider. Then you have the text facility that's sent to the customer to say your ride is arriving, that's provided by Twilio. The payment that you made is managed by Braintree. The receipt is emailed to you by Mandrill, and the service is hosted in the cloud. Now, if that is not a prime example of how fintech organizations can offer open API platforms into the banking industry, that the banking job, I don't think there is a clearer example, Gerald. You're on mute, Gerald.
A very good example, and I think it appeals to the layman, so they can understand what a fintech ecosystem essentially entails. I think I'd want to shift gears a little, because obviously in this kind of ecosystem, there's a lot of exchange and movement of information and data. And of course, one of those most critical and elusive resources for any financial institution is data, just given the amounts of it from different stakeholders, different participants in the ecosystems. So as organizations interact with customers in more digital ways, the mass of data continues to grow. So integrating, accessing, and managing this data in a well-governed and controlled way is a prerequisite for financial businesses of today, including fintechs, and indeed to power that API ecosystem that we were just talking about, and both for compliance, but also for ethical reasons. So Leslie, I want to come to you, and perhaps if you could share some insights about what are the critical elements of data governance that can help accelerate digitalization in financial services.
Great. Well, it's a good topic. Thank you so much. The objective of good data governance is really to build a trust framework for the data ecosystem to fuel the digital economy, especially in the financial sector. And but fundamentally, what exactly is good data governance. In a broad sense, it is about the policy, regulations, incentive model, establish how data assets are collected, shared, used, stored, and reused. And the whole concept is about the who, what, and how of data protection for personal data and non-personal data, for public intent and private intent. I draw upon a lot of experience from international example to strengthen this topic. As a member of the World Economic Forum for the Global Future Council on Data Policy, we focus a lot on the strategic insights, scientific evidence, and forward guidance and multidisciplinary approach, both public and private sector, to help raise the discourse on the new global norm around data governance, which is a critical part of the digital economy. And this year, the World Development Report of the World Bank Group is going to be about data for better lives. So stay tuned on that. We're going to try to focus on a few fundamental addressing these questions around how can better data governance achieve these outcomes to build the environment and infrastructure that are needed to support the generations of data safely and securely in order to provide equitable value for the consumer, for the society, and for the business as well. So in the ASEAN region, having a look at Singapore with the data governance from principles to practice, Singapore Smart Nation is a good example of taking some of that effort forward on a human-centric design to apply technology to generate economic gains and improve lives. From the last few years, Singapore has been researching into this and then culminating in some of the latest publications on trusted data sharing framework that was published last year. And I also sit on the board for Singapore GovTech, that provides these kind of technology services. And they also publish AI governance framework to talk about fostering responsible development and adoption of artificial intelligence as data as a building block for the digital economy in Singapore. And so that whole framework is based on data security as a critical safeguard for the country and the policymakers in order to deliver these services for the citizen and the business, and proactively working on various aspects of interoperability as well as portability of data cross-border, not just within the country. So I think that's a good example that I highly encourage colleagues to have a look at. I think that will give us some examples of what it could be like practically to take from principle in an applied way, and how does that influence the whole digital economy, especially in the fintech sector.
Yes, indeed. And I think, Leslie, obviously, one of the challenges that we see with respect to movement of data, particularly in exchanging data between different jurisdictions. If you think about the example that Jason has given about Uber and the ecosystem within which they operate, clearly there is a lot of data flowing cross-border. Now, what are the key considerations really here in order to boost that cross-border flow of data to enable the digital economy? If you could maybe share some insights on that.
I think that's a very important factor, because data, when it's locked in country, it's only good to serve one purpose or one country. But when it's allowed to flow freely in a secure manner and with the proper governance, it facilitates trade agreements for import and export of all goods and services. And therefore, this is a critical element to look into in terms of how to facilitate that and to create that kind of bilateral digital economic growth, and to facilitate fintech as well, from a regulatory sandbox to test that in terms of use cases. So there are some of the good examples in terms of how do we go about making that happen: the data life cycle in the ecosystem, digitalization of the emerging technologies, and also the legal regulatory policy that facilitates that. One example is the Australia and Singapore Digital Economy Agreement that just was announced not too long ago, that specifically talk about data flow in the digital economy and how it modernizes trade rules, assist governments and also businesses and consumers to engage in a equitable way for these kind of bilateral agreement, and covers various aspects. One is about open government data, and agreements on open source technology as well. And so I think that's an example of how we could unlock the full potential of data for cross-border, and where more than one country or the whole region can really benefit from it. So I think that's something to have a look in order for us to take that lessons and then perhaps broaden out to other regions and further encapsulate the key core principles of that and help grow the global digital economy.
Okay, thank you, Leslie, and I think that's quite useful and a good segue into, I want to go back to the original theme around inclusiveness. And looking at data, I mean, obviously some of the, for the ecosystem to work and work effectively requires a good regulatory framework. And I'd like to come back to you, Nandini, on what is the role of RegTech and SupTech, and maybe you can help simplify some of these very difficult terms that may not necessarily be well understood by everybody. What does that play in building an inclusive digital economy? And what are we seeing fintechs ask for in terms of regulatory interventions, either by central banks or other stakeholders and regulatory authorities, to enable an ecosystem where they can play and play effectively and remove all the hurdles and hassles that they have to go through to set up their businesses or to innovate and add value by way of including those who are previously not included. Nandini? Nandini, you're on mute.
You just wrapped up 5 questions into one question, so I'll do my best to unwrap them and then put them back together again.
Thank you.
So when you're, thank you so much for the great insights that Jason and Leslie have provided on this, and I think it's so connected to this question. When you talk about building an inclusive digital economy, and you talk about taking an ecosystem approach, as I mentioned before, you want to work with all parts of the economy, right? And as my esteemed colleagues know, you can't just, when you talk to the public sector, they say, well, we want to work hand in hand with the private sector, actually. We want to hear their feedback on what's going to work and what's not going to work. And when you talk to the private sector, they say, well, we need to talk to the public sector to make sure that those mandates and the regulations and supervision make sense, right? So when you actually get into a market, and Jason's nodding his head, he knows, you realize it's not one thing, right? They're all kind of interconnected, and in fact, they've known each other for years, right? Their kids go to school together. It's a small ecosystem, even in a city like Nairobi, but especially in other countries that we all have stayed in or lived in. So the policy side of things is critical. Everybody talks about how important policy is. And policymakers, I am deeply empathetic towards the plight, if you will, of policymakers, because they must be ensuring the stability of the economy, ensuring the stability of the economic system, allowing for innovation, right, to let that economy thrive and also help support the customers. And increasingly, central banks, or almost every central bank, has goals around financial inclusion. So they want to be increasing the number of people that are in the formal financial system for a variety of reasons, including stability. But yet they also have a responsibility to protect the citizen from fraud, from fraudulent financial sector actors, et cetera, right? That's a very delicate balancing act, right? And then, as Jason had mentioned earlier, you have this whole new set of actors that are very different from the traditional banking sector, the fintech sector, and you have digital finance with the MNOs, and I think the central bankers kind of got their heads around that and have been doing a really effective job, I think, in managing that. And then now you have this sort of class and group of fintechs that are the new wave and new age. And actually, the moderators were commenting on something that one of the speakers was saying about how, in one of the countries being discussed, there was a one-stop shop. So fintechs could come in and speak to the regulators about their relative concerns and about their relative challenges. And I think that regulatory navigation piece is really, really key, right? How do new actors, often young, often not that experienced with the regulatory frameworks, with regulators. One of our jokes was often they don't even own a suit, right? And normally when you go to a central bank, you always put a jacket and a suit on. And so how do you help them with that regulatory navigation is really, really important. And I think central bankers and other relevant financial sector regulators, because the telco regulators are becoming more and more relevant, competition regulators are becoming more and more relevant. All of them are realizing, okay, we need to come to fintechs where they're at and really help them understand what we do, and that we want to have an open dialogue with them. And I think the best regulators, which are most of the regulators that I work with, want to talk to them. They want to have an open dialogue with them, right? And so I think it's about helping those two groups meet in a safe space, and facilitating those conversations is a big part of what market facilitators do. So the role that SupTech and RegTech play in that is a few different things. RegTech and SupTech are essentially regulatory technology and supervisory technology, right? Regulation and supervision are the two main pieces of policymaking. And increasingly, with the huge amounts of data, going back to what Leslie was talking about, coming through and being collected by central banks and other relevant policymakers, it's difficult for small central banks with like limited bandwidth, limited staff to be processing all of this data, right? Because they aim and want to be making database decision making, but it's difficult to do sometimes with the amount of data coming in. So I think when we talk about RegTech and SupTech, it's about how do we leverage technology in such a way to make that data capture and data analysis easier for regulators, for policymakers, to then process that data and then be able to make decisions. So one example is work that we did in Zambia, and we've also done in Nepal, where we've worked with the central bank to actually create a DFS data automation system. So all the data coming from digital financial service providers into the central bank, or the division of the central bank that captures that information, is digitized and is done digitally and automatically. And so the system captures, has the data been completed, has it used the correct template, so on and so forth, and then even does an initial analysis on the parameters that have been requested by the central bank. So that's just one example. I realize I've been talking a lot, so I want to pause here. But these are some examples of what we mean by leveraging technology to actually improve that delicate balance that the regulators must play in a market to build an inclusive digital economy.
Very useful, and thank you very much for that, Nandini. I want to shift gears a bit, and obviously you can't have a conversation today without talking about the impact of COVID-19, which essentially has affected every region. We're looking at the impact of it on the financial ecosystem, fintechs, very widespread in terms of the impact, in terms of the shift it's driven around customer behavior and organizational behavior. Now, when you look at some of the trends that we see in the fintech industry, one, we're seeing an acceleration of digital trends, a lot of digitalization. We're also seeing fintechs moving into adjacencies and bringing out new products, new solutions, getting into new partnerships. We're seeing the rise of platform business models. And beyond that, increasingly from a corporate standpoint, we're also seeing a lot of deal activity where corporates are seeking to extend their reach and offering by acquiring fintechs to move forward. In that respect, Jason, I want to come to you and ask you, when you look at this in terms of the changes that are happening as a result of COVID, and the increasing digitalization across all industries, what approach or strategies should one be thinking about to take advantage of this as we increase this inclusion and build a bigger ecosystem?
Thank you, Gerald. A very A very interesting question. And you're absolutely right. The rise of fintechs and other startups during COVID has been phenomenal. I was listening to a broadcast this morning by one of the senior vice presidents of Oracle, that he basically, what he was essentially saying is that the world has advanced 5 years in 9 months in the way that we use technology today for how we interact, not only on a meeting like this using this video conferencing facility, but also in the way that providers provide services to others. So, we are experiencing a digital transformation like never before. This has never happened in my lifetime and in many people's lifetimes. And there are some key elements that you need to take into account if you're going to succeed. And a lot of startups and fintechs are coming across hurdles, and they're not sure how to proceed. So, the things that I would say that you need to focus on if you're going to succeed in the new fintech world, if you're going to look at how you work in the digital economy, what is the infrastructure that you need, what is the digital business that you're trying to create, but also more importantly, what is that customer experience or customer interaction that you so desire. So in 3 words, it's how do you connect, how do you monetize, and how do you engage with your customers. If you keep those 3 elements in mind all the time, and always refer back to them when you're doing your planning, you really can't go wrong. From a large organization point of view, and this is the same for many companies, and it's the same at Oracle, we had to have a change in the management strategy, and that has to come from the top. And Oracle has been very, very effective in doing that. So our C-suite they took an active role in the transformation of Oracle. They were committed, they were unified. And they said, this is the goal, this is what we're expecting to achieve, taking into account those 3 things: they connect, they monetize, and engage with your customers. So how does Oracle do that? The next part that you need to then think about is the strategy in place, number 1, but then is it necessary and is it desirable? So is it necessary and is it desirable? And the 2 go hand in hand. You can't have one and not the other. Because again, if you try to do too much too soon, if you try to completely reinvent yourself, something is going to fall down, especially if you're a large organization, because you don't have that ability to react quickly to what the market changes are happening. Okay, many companies have failed in transformations. Many companies have failed to do a digital transformation of their organization because they failed to meet their own expectations. So you need to set out what it is that your goal is. A very large part and a very important part is the human element. You cannot forget that all companies are run by people. You and I, Gerald, Leslie, we're all here. We're people. We're human beings, and most of us do not react nicely or do not react very well to change. Because the perception is that change is going to have an impact on me because I don't know whether I have the right skill set. I'm used to doing my job as it is. So you have to minimize the disruption. And the only way that you can minimize that disruption is by keeping the employees informed. What is it that we are aiming to do? What is the messaging that we're putting out to that? And do early communication, do frequent communication of what the plan is. And again, I'll go back to what I said before, that if you don't have that plan, if you don't know what you're trying to do, then your employees themselves will not necessarily be engaged on it. And my last point on this would be that change is normal. The changes that we have seen in the last 9 months during the COVID pandemic have been extraordinary. As I said, we've never seen anything like this before in our lifetime. But today's world is moving very, very fast, and you have to embrace it. This includes large corporations, this includes the startup organizations that are coming in, the fintechs, and how they're disrupting the industry. There is no end to this, it is continuous. And if I leave you with one statement, please bear this in mind, that if the pace of change outside of your organization exceeds the pace of change inside your organization, the end is nigh.
Yeah. I think very, very, very pertinent, especially in this operating environment that we are faced with in COVID. I do want to shift gears a little because there's a topic that I like Nandini to shed some light, and then I'll come back to you, Leslie. Nandini, talking about people, what is the role of women in ensuring digital inclusion and building this ecosystem, particularly around fintechs? How do we do it?
Thank you, Gerald. Thank you for the question. Jason, really powerful last statement. Still thinking about it.
I can't attribute it to myself, Nandini, so don't put as quoted by me.
Well, okay. Well, I really liked it. Very powerful. So thank you for the question, Gerald. It's really important and it's close to my heart. You know, it's close to UNCDF's heart. In terms of building an inclusive digital economy, we believe that women are builders of those digital economies and should be builders of those digital economies. And I want to be really specific and really clear. You know, I think often we talk about, in the development industry, so to speak, we talk about women benefiting or raising women up through technology. And while, you know, that has its tenets and has its truth to it in some ways, I believe that it really discounts the agency of women. You know, I think women are not one block of people, right? There's lots of different kinds of women and different places that they are in their lives. But, you know, I think that in large, there's huge gender gaps across the world, specifically in least developed countries. There's a 62% gender gap on SME ownership. There's usually a 10% gender gap on mobile phone ownership, even higher on smartphone ownership. There's a 35% gender gap on internet access. So you can see there are gender gaps, right? Where a man is more likely to have access to all of these things, a woman is likely to not, right? And why is that the case? That's the case because the societies that they live in, fundamentally, the societies that they lived in have said it is not necessary for these people, for these populations, for these segments of people to have access to use digital products, phones, internet, products that you would have on those phones and internet, including digital finance. And I think that that's a big part of the exclusion that I'm worried about, that we're worried about, that as these economies digitize, that women, youth, people living in rural areas who already are sort of a little left behind in a non-digital economy become even more left behind, especially in a COVID economy and a post-COVID economy, where digital becomes even more important. And so, but as we talk about that, this is our moment. This is our opportunity as individuals, as contributors to digital economies in the countries that we work in, to say, well, we're rebuilding, we're creating fiscal and government reforms in the countries that we work in. We are, as Jason and you just discussed, creating new opportunities with fintechs and other digital providers that are creating new business models. Let's ensure that women are part of building those, right? Not just beneficiaries of those, which is important, of course, but builders of those and giving inputs to those and saying, well, how do these products help you? Do they meet your challenges and needs? Are they accessible to you? And if not, how do we fix those things? And are they safe, right? When we talk about digital products, one of the really important aspects that's kind of ignored and is kind of said, okay, well, yes, that's something we'll deal with later, is it a safe space for women, right? If they allow for comments and things, sometimes women are trolled, right? And given a lot of negative comments and things like that. And so I think this is our moment as change makers, as contributors to what the new digital economies look like during COVID and post-COVID, to really empower women and say, you know, women should be at the table and women should be rebuilding these economies together to make them more resilient for the next problem, the next crisis, financial, economic, health, whatever it is, it will be more resilient because women are building it together. And I'll leave you with one quote that I just heard today from a colleague of mine in Zambia, and she said, "Listen, this pandemic has really separated the women from the girls, and it's the women that have been able to keep it together, get access to their capital, keep their business going, and those are the strong, and they've survived, and it's our time to help them to keep going and to thrive because they've kept it together." Right? And this is an amazing woman digital finance expert that I work with, say that, and I thought that was beautiful, and I think that's very true, and I think it's important that we all take that perspective as we're contributors to building these newer inclusive digital economies during and post-COVID.
I think very, very well put, Nandini, there, and I think it's pretty clear. I know we've got about 2 or so minutes before we end. There is a couple of questions that have come through on the chat. And I think I'd like to ask Jason to respond to one of the questions. But as Jason prepares to respond to the question, Leslie, just 1 minute. I know there's a topic here that is very, very close to you around what is social contract in terms of the role of the public and private sector in ensuring that we build a strong digital infrastructure and fintech ecosystem. Jason, I'd like you to look at the question around 5G. And if one of you can look at the use case question that has come through from as typed by Leone. Leslie.
Thank you so much. I'll be very quick about this because I think it's going to come into the World Development Report, and understanding the social contract was our responsibility to the next generation. And the role of public sector and the role of the private sector, governments being one of the policymakers and creating an enabling environment for innovation, as Nandini talked about as well, while proportionally regulating new technology and protecting the public from any of the unintended consequence of technology use or misuse. And then private sector, fintechs, financial institutions, big techs, to provide that kind of stewardship for data and new technologies, taking responsibility for the social obligations. I think those are the critical elements, and most of it will come out in the coming months when we publish that report. But I think those are the foundational elements that we need to raise the awareness of the responsibility that all of us have as individual, as government, private sector, to come together in order to create that kind of a path forward as we build towards the recovery for the economy. Thank you.
Very well, Leslie. Thank you very much. Jason, do you want to attempt the question on what's the view on network connectivity, penetration versus network quality upgrade? For example, 5G in building the digital infrastructure.
Sure, happy to. So Qureshi, thank you very much for your question. I have a personal viewpoint on this, that the two go hand in hand. So your question is, what's the view on network connectivity penetration versus network quality upgrade, e.g. 5G? So network connectivity penetration is key to fintechs, and it's key to a digital transformation. Without having that secure, reliable network quality, which comes along with the 5G, your ability to work on open APIs and to work on the digital infrastructure is going to be very much hampered. Some telcos always used to say that it's all about the handset, it's all about the consumer. The people who are profiting, if that's a real word, most from 5G are the fintech organizations and the startup companies. So the likes of an Uber, whether it's Uber taxis, whether it's Uber Eats and other things like that, they are using the infrastructure and the investment made by the telco companies, and therefore using the data to further advance their own business without having to put that investment up front.
Very well. Thank you very much, Jason. I recognize that we have come to the end of our time. I really want to take the opportunity to thank our panelists this afternoon. Nandini, thank you very much. Jason, thank you. Leslie, thank you for joining us, for sharing your insights. Very, very useful. I think this is a topic that we can continue, but unfortunately time is not on our side. I'd also like to thank the audience for joining us this afternoon. Thank you for your time and enjoy the rest of the event. Nandini, Jason, Leslie, very nice chatting to you this afternoon. I really appreciate your opportunity.
Thank you, Gerald. Great job. Thank you.
Thank you, everybody.
Stay safe.
Thank you.